Good morning, guys. Happy Monday. Happy Monday and happy green start to your week. Who woulda thunk? In terms of the start, we're pretty balanced. Pretty balanced. Nasdaq with a few more points. Most of it's again lined up due to rebounding, but a pretty strong start. It's not 1%, but it's a pretty significant amount still, I would say. And if we talk a little bit about from Friday, it's it's again hard to put into perspective, I guess, the trend that we're on based on just looking at the number. We sort of just broke even on Friday, but really that's not the way to look at it. It's not about the sort of the price in the way it ended on actual price value. It's the movement, right? And it's the trend continuing. That was the most important part. And we opened very high and put a lot of bid in on that day, actually. And we talked about that actually going into the day that it was going to be most likely we were going to open higher. Nasdaq really did it. And that's really the most important part, is to continue to put higher highs in the day, even if it pulls back a little bit. And we're continuing the trend here today. We'll see if we go bid from the morning. Now, we have a lot going on in other markets. We can talk about that, obviously. In terms of our positions on the equity side, we continue to push through the long for a long-term approach, specifically through value. And we're trying to trade through growth with mega caps. And what we're now trying to do is take a little bit of extra risk, since, again, a lot of those are very long-term, kind of being boomer investors by trading so long-term. But that actually sort of allows us to take more risk here in the short term, which are things like maybe pressing travel a little bit harder, and then pressing on the retail side as they re-enter due to basically removing themselves from crypto, right? And so we keep trading long. Now we're looking for risk. Let's first just take, again, a look at the other market here. The weekends are always the most exciting, right? So what happened this weekend? We are now down about $1 trillion from the total Bitcoin cap. We sold or the whole crypto market, I should say. We were down 500 billion when we closed out on Friday. Now we've took off another 500 billion from that market. I want us to go look at this when we were looking at this over here. Now, obviously, I've already talked about the weakness in Bitcoin, and then we had back over here on the 19th, we had China starting to come in talking about regulation. They've also done that in the commodities market. We'll take a look at that as well. But we were looking over here, going in towards the weekend, and I talked a little bit about these trend lines. Now, again, these are the trend lines from back on the 19th when we were looking at them, and yeah, we've basically held this trend line. Now, this is probably going to be the most important trend line to come up is whether or not you can come through this resistance, because at this point it's been pretty bearish. Now we've come off the low a little bit again, but that doesn't really help with anything, right? Doesn't really help with anything. It's a lot. It's a lot, and then the entire market, it's a lot. I would say it's coming to equities. That's it. If you ask the question, is it institutions or is it retail? It's the cult personality of Bitcoiners. You know, the hodlers will act like it's somehow institutions trying to fuck them over. They'll talk about how hedge funds and banks are on like the brink of extinction and they have to somehow sell all their Bitcoins, and same thing with like GME and stuff. That's just weird cult personality that obviously is very far from the truth. They are the biggest institutions in the world. They hold the most assets in the world. It doesn't really make sense. It's basically a non-factor. If you actually look, after this sell-off going through the weekend, there's been zero volatility on the actual on the indice market, right? when we look at the entire equities, there's no implied volatility or anything from this move on the crypto side. No one really actually cares. And that would be the direct relation to those big institutions. So again, this is mostly retail. Uh, it's I don't know why it needs to be such a discussion or why it's such a big deal that people don't have diamond hands, right? It's just a meme. Uh, we're all basically paper hands, and yeah, everyone basically sold. Now, there's plenty of people out there still buying, right? But it's still important to note that those that are selling through here, if you look at the way the volume is diminishing over this entire time, we went from very high volume through a lot of this trend, and now we're actually getting very low in volume. And what's going to happen again is the spread starts to increase because of that. There's less liquidity involved. Less volume means larger spreads, means more volatility, and just means that more people are not really participating. And those more active crypto sort of retail traders, we know what they want. They want this sort of volatile situation, a promise of possibly getting rich from something very quick and easy. They don't have to think about anything. And right now, crypto's not really giving it to them, most likely. If you look at it, where else are they going to go? The equity market. The other side of the equation for institutions is where else are you going to go right now? You can't trade bonds. Commodities are, you never wanted to really trade commodities anyway. You go to the equity market, right? And so the overall equity market, again, continuing to be really the only place to put money. And again, it's a little bit of a problem with the dollar. You don't really want to put your money in the dollar, or at least hold on to cash, because you're just kind of losing money. And the more the dollar goes down and inflation continues to increase, again, you're literally losing money. And especially if you're an institution, if you can't loan out the money fast enough, which banks can't right now. Institutions have a very big problem with lending. They can't lend any faster. What they need are higher interest rates, right? Since the interest rates are at zero, all they can do is lend as fast as possible. They still don't have enough. There's just not enough people to lend to still. They're looking for interest rates to go up. Now, when I was looking for the crypto space causing volatility in the market, I was looking at sort of how has this inflationary sort of problem, as we've been solving it over the last 6 months or so, what is that looking like in the volatility markets in terms of pricing in future volatility due to a Fed rate hike, right? That would be a surprise if they came out and said that we're going to increase interest rates. Now, I'm on the board of people that say it's going to happen sooner than later. But if you actually look, it's not being priced in the next 6 months. There is no volatility price for a rate hike in the next 6 months at all. Zero bets on volatility due to that. And that's probably very true. Probably not going to happen this year, right? The reason is that we don't really get the data until 2022. This is what I've talked about, is that it's really not until we actually get the data will the Fed make a decision. They've been pretty clear on that. So I think market is being pretty much in line with what the Fed's saying. Now, the other side of it, beyond interest rates, and so again, that sort of situation again is going to continue to come up, but it basically is not going to be till 2022. The other side is the Fed buying, right? Buying the 120 billion a month. That is, up in the air. Now we have some preliminary GDP numbers on Thursday. We'll see what those look like. Again, it doesn't really matter what the estimate is. I think at this point, again, throw out whatever the estimate is. Who cares? And if it beats, it doesn't matter. It's whatever the actual number is. The market doesn't react until they see the numbers anyway. So none of these things matter, and we've already seen that the market doesn't care if the economy is doing well or bad, because when the numbers come out bad, the market does well. When the numbers are good, the market goes bad, and vice versa. It doesn't even matter, right? So none of these things really matter at this point. The discussion is really about interest rates, and now looking towards China. So China, first of all, last week came out with talks about cryptocurrency regulation. Now, this weekend, they came out with talks about the speculative commodities market. This affected steel, it affected a lot of the metals, not specifically the majors like gold and silver, but it did affect some of the others that, again, have been entering the super cycle, which we've obviously been rallying on with things like trading with X, right? This is going to be down, so we're going to leave X alone, right? We haven't really traded since back here. If China's jumping into the market, trying to take down on sort of the speculation that's happening on the commodities market, it is going to affect the equities market with those tickers that are specifically tracking a underlying commodity asset, right? So X steel. Now, it's it's a little, janky if it's a US company and then China's regulating steel, and that's why I'm saying we're just going to leave it on the back burner for now because it may not affect US companies, but we've seen in the past that these things usually boil over and cause some sort of ripple into an international sort of sense, just like we see with oil and how United States entered in with natural gas and started putting that on the market, and then everyone fucked up and started putting too much supply on, and now we have these very strange situations happening all over the world because everyone has supply now of everything. So we're gonna just wait on things like steel for now. Obviously, we took the lumber play on Friday. We'll see how that comes out at 10 o'clock today. So again, crude here continuing to do very well. I expect this to continue. Uh, you know, when you look at it from an inflationary view and the economy opening, the economy getting hot, the transition to renewables, it does cause sort of a appreciation of prices naturally. The biggest thing would be whether or not that supply all hits the market at the same time, causing prices to come down. It's very unlikely. And right now, countries like Russia are actually benefiting from prices going up, which in the past they weren't. But this is the sort of the difference is that there's an understanding that this side of things that pollutes the planet is not going to be a thing in the future. And so by having oil prices continue to increase, it causes that transition to happen faster. Everyone knows that, and so you basically want to take advantage as much as possible right now. And so what you actually see when you actually look at the numbers is that even though prices are going up, it's because again, countries like the United States are reducing supply to the market, but that's such a large number that compared to someone like Russia actually putting more oil on the market, trying to take advantage of higher prices, you get this sort of balancing act. And the more that sort of OPEC, the overall cartel with Russia, the more they try to take advantage of the moment. Again, the quicker this process is going to happen of transition, and the more it will drive prices up. It will drive prices up no matter what they try to do. And so we want to continue to take advantage of this energy play and really make sure we're continuing to link it with our value play and the bank side, which is if you look at the similarities between the way that banks and energy are trading, we look at XLE and XLF. It's very similar, and it's important to keep them linked. And if they sort of break that link, then we're going to make sure we notice that and start to change our view a little bit, right? But for now, we continue to trade through the sort of the two sectors that put the most points on. It makes the most sense. We continue to push those long positions. Eventually we'll figure out what exactly we need to do. But for now, I mean, it's doing very well, so no reason to stop that trade. Okay, let's jump over to the other side of things. We have semiconductors up this morning. So UMC up 3%. I can make a quick comment of the space move. This has continued to rally. All kinds of stuff going on. Obviously, they had some news. It's coming from the brink of death. Again, I'm not a momentum trader, so good for anyone that bought over here. This was obviously this is quite the circus over here. A lot going on. Who knows what's actually going to happen here? this could definitely be the next retail sort of, uh, fiesta. So we'll see what happens there. But so again, semiconductors and this smaller tech side of things are up on the morning when you look at a couple of different tickers. I do see some retail presence there from the higher option volumes. Again, we sort of fell down in volume from the peak. Looking at March, March was all-time high options volume. We fell from that peak, even with the stimulus checks coming out. No one really put it there. They put it in the crypto market. We're going to be watching to see how that market continues to grow in volume and then again continue to track its impact on the underlying market. Again, the reality is still that the option market really dictates the underlying market in terms of the pricing that we see on a day-to-day basis, and how we can see during a week how prices can get bloated or how prices can make more volatile moves due to those options. Again, it's really important that we've seen prices be very slow recently, that we don't get caught off guard by not paying attention to what the actual numbers are in the option market, that then cause some big move on a ticker that you're looking at, and you're like, well, what happened? And then you go look and you see, oh, okay, there was a shitload of calls, or there was a shitload of puts that were on this week, and again, it's going to make a move just due to those, because and there is the option to exercise those, and it does cause a supply problem when those are there. So that's where the game ideas come in. It's important that we sort of remain on our course that we have been, but just keeping an eye open for some of these ideas. And again, for risk reasons, I do want to take advantage of just being technically better than retail sort of traders, in terms of you can just split their spread and you can at least sell to them in a lot of situations. So buying out of the money's become not an issue. Buying shorter terms become less of an issue, right? Those sort of things really start to come in, and we do see them. And again, we're talking about $1 trillion came off crypto. There's going to be plenty of people ready to buy. I have some friends that, for instance, took like profits on things like Doge, some of like Ethereum, and those kind of people again are going to enter the equity market, and they already want to know what to buy for options on the equity market. This is just the way of things. Everyone knows not to go put money into a savings account right now. It doesn't even. How can you go from trading crypto to putting your money into a savings account that makes zero every year, right? It's just not even possible. So, and they're not going to buy dividends. So the the old boomers might and beyond, but younger generations are not going to buy a sort of sit back, relax sort of situation when that's not really the style, right? You've already seen what can be done. We've seen a lot of things happen since in January with GME and AMC and all these. So I think it's coming. Again, I think it's coming, and so we're gonna be ready for it, and we'll see. We'll see. Travel continued to do well this morning. We'll see how that goes. Gold continues to climb. This trade's been very nice. In terms of, again, you're basically on your own in terms of how you transition these. I transition them every week. So again, just to put into perspective, this JNUG and the nugget trades I make, I do them every single week. I will make the trade. I always make sure to get out of the trade by Thursdays, and I make the trades in the first hourly candle. If gold is green going into the equity day, I buy on the first green tick on the equity side in that first hourly candle, and I'm out by that first hourly end of the candle. And so, and you just put it on the hourly. Very easy to do. Put it on the hourly, and you watch. And if this opens, you look going into the day. So last Monday, we were opening green on gold, because again, gold's 24-hour market. I watch for the first tick that comes in. It's green. I buy. I'm buying my calls. And by the end of the hourly market, if I need to get out of the position, for instance, I'm making sure I'm out. Or I wait till the next hourly candle to make my decision, and we go from there. Now, since we're in a long-term gold sort of trend, obviously what you're doing is you're only doing that when you're transitioning. So let's say you bought here, you're still in the position, you're waiting. And so maybe today is the day that when you get into a situation where your first tick is red, I'm going to take profit on those calls. Look to re-enter them on the next day on that first hourly candle with the tick, and so it just you continue to pace it and go and go. And these are big trades. There's a lot of percent on the option side because again it's super volatile. It's leveraged. Yeah, so not for everybody, but this does pay a consistent return, and it's a lot of risk, and it's again a lot of people that are you have to have the timing down, or else you're going to get hit by just swings that come in that are just natural anyway. But people don't really look at it like that because I don't know, that's just not what people do. So I'll continue with the gold play, even as we have China talking about speculation on commodities. Gold has not been rallying, so we have that going for it. I'm going to talk about a little bit of the charts I posted last night, or really posted this morning. It's been the new theme post in the morning. There's some interesting ideas on some of these charts. A lot are similar. I posted in the channel some of the from FT posted some interesting charts about sort of the active manager side of asset managers. Again, just about all wealth is in a passive fund right now. You know, things like your Vanguards and shit like that, right? Or it's just in an ETF, right? Everything's in ETFs now. Every single institution has an ETF. But if you look at the more active side, the insurance that goes into asset management, things like AIG, right? And you just look at the overall sort of spectrum of asset management and that financial tertiary side, it has not done very well since everything's outflowed. And so when I was looking at that, I thought I was like, I know that we've had some asset managers do well. They're beating the average, but they're beating the average by quite a bit. And they're at such a low point in terms of flows that everyone's just going to ETFs that you are talking about some. I mean, when we talk about bottom fishing ideas in terms of flows, it's about as low as it could get in terms of flows. And so really the only way to go from here is to start to inflow, which presents a very interesting sort of situation because if you look at a lot of these charts, they're just continuing to trend up while they've lost all their flows anyway. And so there's some interesting dynamics when you start to look at them that if they do get inflows and they just continue to appreciate anyway, then you're actually looking at a lot faster sort of speed than the average. And so your velocity to the upside actually sharpens. And so I think this links with I have a little bit of a contrarian opinion about ETFs. I think that ETFs are sort of too bloated, and I've used this term for other things as well, is that as you get more bloated, you actually start to present a bit of a problem that you don't really you think about ETFs right now. It's all momentum trading, right? And you gain momentum and that incurs new inflows. If you're too bloated, it gets a little too spread out, and it's very hard to get momentum across the board because you actually need buying across the board. And so what happens is you start to actually get all of these ETFs to start to basically integrate together, and every single bit, all the pieces are basically being bought by every single ETF. So you'll have ETFs that all have the exact same holdings, plus or minus one, and you start to get this very weird thing that you basically could buy the same thing everywhere. If you've looked at some of my short-term pattern listings, I actually have gone through them over sort of the last year or so, and you'll see that they're all the exact same chart, and they have almost the exact same holdings. It's just a different level of money that's within the fund. There's basically no difference, yet on paper, it's creation of wealth, and it's money that's in the market, and it doesn't price in that it's spread across multiple, right? If you put your $10 into one ETF, it does get spread into some other ETFs because of that, right? Because those individual holdings, as they're bought by that one ETF, then transfers over to the other ETF that has the same holdings, right? Sort of like the ARK dynamic. If you look at ARK, they barely have any money. They've got less than 20 billion. They are a very small institution. But what do? They employ ETFs. They've got like 30 ETFs. A lot of them have a lot of similar holdings, and what will happen is that it'll carry over. Every single one will benefit the next, and each one will look like an inflow. So every time one company gets bought, it then positively affects the other, and you get this feedback loop. Now, this is happening ever since sort of the indoctrination, or whatever you want to call it, of just passive investing. As soon as index funds became the sort of the top thing, index funds have led to this ETF boom, which have just taken over the market. There's nothing else. Literally ETFs, right? I mean, that's all we do. It's bloated. I'm not saying there's a problem with that. But what I'm saying is that it's now to the point where active asset management and active sort of investing has sort of come back a little bit, because if everyone is buying everything, like I said last week, you're not diversified if you buy the S&P 500. You can't be like, well, I'm in the S&P 500. I'm in the S&P 500. I'm diversified across 500 companies. No, you've bought the same 500 companies as everyone else in the world. You're not diversified. It's the same thing with ETFs. ETFs that have the same holdings as every other ETF, they're not a new ETF. They're not diversified. They're the same damn thing, and they both present the same problem. And this is where active management, which basically deals with the more volatile side of the market, can start to actually make moves. And if you look since COVID, what has done the best at banks and institutions? They're trading floors. They're active trading floors. They're prop desks out there that have people that are just sitting around and trading very actively, not sitting around. Things like, myself trading through COVID did very well. They did that times, a million, right? And those funds have gotten significant returns, yet no one wants to put their money into one of these funds because it's active. They only want passive. They want a passive return, no risk, and most of their gain just comes from more inflow. Basically, the more people that join, the more the fund technically increases as a percentage, right? Active management doesn't see that right now, but it's basically at a low point. No one's putting money in now at all anyway. Yet they get a higher return than passive investing, the passive funds. So if you were choosing to either put your money in a Vanguard or put it into an active, you're either getting 12% from Vanguard, or some of these actives have 20, 30% that no one's putting the money in, and you could choose that. And so I think that people are going to start to look at that and see that these active funds have actually done well. And just looking at that, infographics and stuff, I was like, we know this. We know that trading's doing very well. We're just not seeing it. That starts to lead to, again, the other tertiary markets, your things like AIG insuring fucking big CLO bundles and everything else, right? You start to really see this shit pick up. And so I do think that we are seeing it right now. And so there's some of them are a little bit short-term ideas on the list I just posted, but I think we're definitely in that area, and especially with getting close to possibilities of interest rate hikes by next year, Fed changing its mood. These things, they do lend to more active approaches, because it's very hard to, again, your passive investing is very hard to get out of those things. You've put so much money behind them, you're not getting out of them. So we'll see how that develops over maybe the next 6 months or so. But either way, boys, bullish start. Let's see how we do here. A bullish day, a bullish week. Thanks for the call. Yeah. So again, there's plenty of public asset management companies that we've looked at over the time. It's definitely a sector that's performed very well, and it's a part of the value side, right? When we look at banks, and I've mentioned tertiary sides of that bank dynamic. They're definitely interesting. If I'm taking it on just they're already a part of the value side. They're already trending, but if you do look at it from, if they do get more inflow, it will cause their prices to skyrocket. If you just look at how ARK went, ARK barely got any money, but it got inflowed a percent higher than what they were already doing for a return. So these things do. When you talk about earnings, and that's literally the only thing that can change the value of a company, uh, if one of those managers come out and it's just different than before, then you're going to see some significant changes on that side because they are very low. They're very low compared to ETFs. Like it's just not even fucking. It's just disgustingly not even close because it's so easy to buy ETFs. And because to put it in perspective, if you have a lot of money, it takes a very long time to go put your money in one of those funds. Like it takes a very long time. Instead of just loading up a fucking app and putting your money into an ETF, you have to go to a office. You got to set up an account. You've got to do all these things, right, to put your money into one of these things, and you got to prove that you've got, $5 million that you can put in there, and you got to prove that you're not going to take it out by a certain date. You got to sign. You have to have your lawyer there to sign fucking papers. Those things are difficult, but it's 2021. Those things are changing, right? And there's institutions that also have money that they need to spend, and you start to do what? You start to give that to active management, and you see that by the big banks all the time. We haven't really got there yet where they have so much money right now they don't know what to do with it, right? What are they going to start to do? They're going to need someone to start managing that, and they have plenty of risk to take. You start throwing that to active managers and fucking let them go. Here you go. Here's 10 billion. Good luck. Expect a return by the end of the year. 20% sounds good. You take 10% of the risk. I gave you the money. Those sort of things. We'll see. Nice start to the day. Very nice start to the day. In terms of the question of all-time high this week, it's about 1%. You could do it today. So I don't think it really matters, though. I don't know if hitting all-time high right now is going to do anything. I think we're already past the supply anyway. So it's not like we're stuck in supply here. Or anything like that. I mean, I know we have supply from over here, but it was a little different what was happening over here, right? And so I don't know if we're really gonna get stopped in here. We'll see. But what I would say is that if we do hit all-time high, it's not like we're gonna go rally. I do not expect that thing to happen. This to happen again. We've talked about this before on past rallies. This rally into all-time high is just unsustainable, and something's going to happen. There's just no way to sustain this. You're talking about you're talking about, I mean, tens of billions of dollars every single day to push the market up like that. There's no way to continue to do that. Everyone, you can only buy so much. You can only start to buy again once you took profit and you created some wealth, right? That's not going to happen. That's why we have a certain trend that we can take, because there's a certain amount of take profit that allows us to buy more and generate further gain on the market. That's the pace at which the market trades at, right? That same trend line we have on every chart, that degree is the same. I don't expect us to do it again. Every now and then we'll do it, right? But it's because we've been in a longer consolidation, right? When you get a longer consolidation, you can put a rally on, right? Longer consolidation, bigger rally. Here, we're in a bit of a smaller rally, and I just don't see us doing anything crazy. The only side would be possibly the Nasdaq trying to get up to its high a little bit quicker because it's behind, and it could be gamma related, things like Apple again. This trade again, by the way, looking very decent this morning. The same trade from the 11th, looking very decent. I mean, it is up almost 1%, but Friday kind of, these candles can cause some problems in the options market, but most people held through on Friday, which, again, one thing to be careful of is your volume to open interest ratio when you're looking at options. If you have something that is significantly supply heavy, so that would be a very high OI number, but then you see very low volumes, You have to be very careful about buying into those late. And what I mean by late is that, for instance, those contracts started trading a month ago, right? And so they've been trading for a month. They got written a month ago. And now you're buying a month later, and there's like a significant amount of OI, and barely anybody's actually trading it in the near term. So low volume. You can actually see that. You guys should be able to have that on your option chart where you can have a bar chart of volume and a line of open interest. That's a very good way to look at those option charts. So the line is the open interest, and it's just basically an average looking sort of line that climbs, and the bars are the volume for every day. If the bar is a lot lower, then you're going to be buying something that there's a lot of them out there. This can be fine, and it can be good to have open interest. But the problem is that at some point, those are going to be sold, and you don't really know when. It could be waiting until the end of the expiration, or it could just be a day like this on Friday where we lost like 1.5%, and I was holding here on the 11th. Maybe I sold here, right? Maybe I'm going to get out of here because it's been a little slow. And so a lot of the times it's based on the movement, and that's why we use technicals to transition trades. You're coming up to a trend line, you're about to bonk your head on it. We're going to take profit and buy new contracts to avoid those situations. Right now is basically that scenario everywhere. Everything I've looked at, everyone bought through this low on the growth side. You got to be very careful about just getting fucking dumped on, right? What happens when all those calls start to sell? Prices are going to sell very quickly because market makers are not going to provide all that liquidity. They're going to start to split that spread, and you're going to be in a situation where the prices are going up on the underlying, but your options are stuck in like an influx, or you can't even sell them, right? You get a weird problem where you can't sell them, which is literally the worst feeling in the world, is when you have a significant amount of calls and no one will buy them, right? You feel like an idiot. So because its prices are still going up, but no one wants to buy them anymore. They basically put too many points on. And it's usually, again, supply and demand that you can see well into the future. So you can see it coming. So be careful of that. Just for now. Just for now. Once you're in all-time high, it won't matter as much. Liquidity will pick up. That's again where there is no fine line in terms of where to provide the liquidity, and so you can just get liquidity all the way through the all-time high, which is why we push through all-time high so quickly, or in open territory so quickly, as there's just no true resistance, so nowhere to put the orders on. Nice day so far. New chart's looking very good. We're not we're not gonna talk about the Ruby chart too much, but if you didn't see that one, that's a real fun one for you guys. Here you go. What she looks like. Weekly log. Again, weekly charts are log charts, logarithmic. Here you go. Rubius Therapeutics. Not even a penny stock, guys. In the 20s. About to be in the 30s, and I've targeted her almost to 100. Which is about a 250% gain. Not a big deal. A few points. Don't worry about it. But I will say, these weekly charts I've posted, we've started off Mondays very hot. Might be a pattern. It might be a pattern, boys. Might be a pattern. See how that goes. Cute little chart. Okay, we're starting very well on some of the tech tickers we were looking at. Coming off of lows. Again, I kind of changed my mind and flip-flopped on those from my discussion, but that's again because I have some risk that needs to be put on, so I like where we are on those. In terms of ARC and everything, again, this play is not because of how good they look. This is because of how bad they look. And the point here being there's going to be inflow because of retail. I'm not buying because I believe in it. I'm buying it because there's going to be fools behind me. So as long as I'm not the greater fool, which I don't think I am, I'm going to be able to sell my out of the monies to retail. So maybe even you guys, maybe even you. Probably not, though. I don't think anyone here is going to be buying junk when it's when it's actually junk. But hey, MA looks the same, so jump over the average. Let's see. value a little behind. Energy coming down a little bit here. See how this candle reacts. And it's not a very large candle, 40 basis points so far. Everything held so far. Open this up here. Also Bitcoin funny, huh? Very funny. 10% so far. Still below 40 though. Still below 40, and the longer it doesn't break back out, again, for any technical understanding, the longer something consolidates and does not break out, specifically when we actually have a level in mind that we see being rejected all the time, the longer it doesn't break through that, the less chance it is going to. And if it does, the less chance it's going to put a lot of points on quickly. It actually makes it slower and slower every single time. And so that's what we're kind of looking at now is this going to continue through, and are we going to be able to actually get some confidence? I mean, $1 trillion is quite a bit of money, guys. Quite a bit of money. That was in 1 week. I mean, it's hard to even think about how much $1 billion is, but $1 trillion in 1 week? And that was just on paper in a lot of circumstances. It's not like everybody traded. I mean, we're talking, you know, about $1 trillion just kind of minused, which is again the problem with the crypto space, which is why it won't be a currency. All right. It looks cute right now. We're not seeing anything that really helps with anything. You can see gold spike off the open here a little bit. We're waiting for this to give us some action. Coming in soon. 10 o'clock. See what 10 o'clock brings for our lumber. Bring the wood. Hopefully the China news gives us a little bit more of a bump. It might. It actually might. Let me see. Can I get iron ore in here? I think so. All right. Where's X at? This hasn't really reacted, so. Oops. Space coming off from the high. UMC continues. Snap is up from the bottom, the depths of hell down here. Interesting looking chart. Again, a lot of things coming off the low here. It's about sustaining momentum, which sustained momentum is everyone's favorite T word, a trend. You sustain momentum, it's just a trend. Possible. Abscess. I did not expect that. Again, some of these are in a very bad spot. Some of them are a very bad spot. We're looking more towards names that we know for risk plays off the low. Most of them, again, have already been entered, but there are some out here that do offer some chances. Sticking with mega caps, nice move from Google so far. Again, Microsoft and Google, big acquisition focus, is going to perform the best in this market, and we've continued to see that. Google, just, I mean, look at it. Let's just do a run through on the megas. Apple's at 1, so Google's at almost 2, Microsoft almost at 2. Again, the acquisition side of showing itself there. Facebook 1.7. This is a very interesting look in here. This is not as bad as when we look at sort of the other tickers that look like that bear flag. This would not be the case here. This is certainly very bullish looking. There is a difference, right? There is a difference when you look at the way a bear flag forms or something bearish forms. It's very hard to look at these candles and say those are bearish. So make sure, again, when you're looking at things like that, it depends. Tesla still doing absolutely nothing, so we're removing. We haven't done anything with Tesla. Again, we took the Ford trade instead. Ford's done very well since then. Even today, minusing 2% is just a historical retrace from 7% on Friday. It's a big day. This is, again, this move right here, this is one of those ones that you see this and it's like, you know what, maybe it puts so many points on so quick, I don't think it can go further. I would say this is going to go a lot further here. This right here, it may consolidate in here. I mean, 7% is a lot to do in one day. But I would say that this here is sustainable for a little bit, and at least to put this trend line back over, that you get somewhere, you get something in here. I don't know where it is, but you get this trend back over here, and it's a lot of points. It really is a lot of points. So we've seen it. We've seen it done before through here. It's consolidated very nicely. Is a very optimistic way to put it. This is some nasty moves in here, but your passive volatility, you're ready to put some moves on. I do like that chart over the rest right now. So we do have things like, again, GM that is also coming through the trend, but we're looking for it to break through this 58 area. Once it breaks through there, I'll be a little more confident through here. For now, I prefer more the Ford side. And then when we look further in blue chips, again, we have some other ideas that we've been looking at. Talked about BA candle on Friday was actually a really great candle. Again, we had a few more lines coming through here, coming from before through here, off the top as well, and then the horizontal through here at the 231 area. It gapped through all of them, and there's a very nice look. Things like this, there's just so much more here. There's so much more here than to go buy something like Tesla. It doesn't even make sense that you can say that, oh, it's in a similar spot. It really is in a similar spot. You look at these two charts, and Boeing and Tesla are completely different things. But just to give a perspective of which one would you rather buy, yeah, it's kind of a similar move, right? Kind of a similar idea, except it's just because it looks a little similar, it doesn't make these things alike at all, right? There's really strikingly different sort of bits and pieces of both of those charts. They may overall look similar in a macro way, but you look at the price movements and the way in which things move, and then that candle on Friday, just that one candle alone makes this chart 10 times, 100 times better than that Tesla chart in terms of any sort of value coming through here. So again, there's a lot going behind, or sort of pushing some of the blue chip sort of stocks that we look at. So again, value and the like, they're all the same, but good. Big question still on Z of whether or not this comes through. Yeah, it's again, it's getting traded. See, this is part of the problem where you want to use an idea to make your trade, but you can't. You need to use just price, because I mean, it makes so much sense to continue to trade Z, right? Everyone's trying to buy houses, and it's going to continue. It's not a housing bubble. It's going to continue to trend. So why is Z so far down from its high and not moving to the upside? Because it's being traded like one of the other COVID winners, right? It's a COVID winner stock, and it's fucking. How many points did we do? We did 100% in like 6 months, right? And then we did another one, right? This sort of thing, again, it gets subdued. It's very supply heavy. It's just slow, and you can't use your idea for why it should do well, right? Maybe over a few years, maybe, right? So this sort of thing, again, we need to wait for some sort of technical break. Right now, it's garbage. Even when we're buying like the home builder idea right now, they're two different things. And so again, we need to be careful not to get caught into this unless it starts to look good, right? Unless it starts to look good. But again, this failed, did not come through, traded on the trend line. We need to be careful of looking back at tickers that did well, and then trying to make a story for why they should continue to do well when they're doing poorly, and not rationalize buys like that, right? There's no entry there. No entry there. So even though it seems like a good idea, it's not a buy until it proves otherwise. Snap is continuing. Twitter going along with it. Facebook obviously carrying. We'll see how this goes. Again, you want to play some retail. Here you go. Who do you think it is? You think Greg at Bank of America is on the prop desk right now buying Snap and Twitter up right now? Probably not. Probably not. Um, I'm guessing if we look in here, let's see. I bet you go look at the options right now. I can tell you right now. I bet those are some hedges coming through from fucking buying calls all last 2 weeks through here. Right now it's broke through here. Now it's like oh we're back over here. Okay, that can slow it down though. Definitely can. We definitely see those gamma moves cause more volatility on towards the upside. Uh, but this idea so far, I think we're doing all right. We're doing pretty well. ZS is at the 175.5 area here. There's the level there, and you could trade this between the 175.5 up to here to almost 200. So that's a very nice swing. We did it before over here on the 25th trade. That looks very good. That looks very good there. Now you have the earnings wild card, if you want to call it that. Again, I just ignore earnings. I've only put the bubble on the chart because of you guys. So if that wasn't there, I wouldn't even know there's earnings, and I would just do the same thing anyway. So again, doesn't matter. Does not matter. The times it's going to hurt you are a lot less than the times it does well for you. So because otherwise the market wouldn't be where it is right now, right? If earnings were always bad, then the market would always be bad. Except the earnings are basically 90% always good, right? So that's why the market's always good. Otherwise, you wouldn't get that 12% a year. Now, would you? All right. Coming into 10 o'clock, which is, again, going to be important. I think 10 o'clock has proven to be very important recently. And it depends on the time, but usually 10 o'clock, you get the big boys digesting the first 30 minutes of the market, and then things get going. Not in terms of volume, but in terms of setting up those periodic orders and getting them through and balancing them through the day, right? You don't really see the spikes or anything like that. Sometimes you can as soon as those go through, but usually you see it starting to build from there. So far, green all the way through. And again, little growth focus coming out of the lows. See if it's sustainable. It's a lot of points pretty quick. We'll see how, again, Dow trading flat so far, still up 0.5% on the day. Be watching energy here. Energy already snapped back. It's up 0.5% on the day as well. Banks doing the same. Still at 25 basis points, but again, these just continue to trend. What happens intraday doesn't really matter as long as nothing too crazy is happening. Then it doesn't really matter. Looking very good to start the week. Uber doing very similar things to Snap and Twitter here as well. Again, coming off the low, very similar looking charts. Take a look at travel overall. Well, it looks like we get the same sort of flag on the most of the charts when we continue to do well. We'll see. We'll see if we get this here or not. In a very good spot for this trade to pay us off very well. It was very low risk overall, and again, when you get a good risk, sort of risk reward ratio here on a chart like this, when you see the rest of travel doing well recently, and this is still coming out of its low very slowly, and it's very supply heavy area. The zone, once it's cleared, put points on pretty quick, and we've retraced, but this has already, I should continue to say this more, because I haven't heard it. When we talk about the rebound trade, the reopening trade, the economy can only reopen once. That's it. The economy was closed. Now it's reopened. It can only reopen once. We've already traded for that. We did that. That was all this stuff. Remember this thing came down and then we came back up? Yep, that already happened. We reopened. Now there's some things that are still a little slow. You look at the old death boat. Yeah, the death boat hasn't gone back to sail yet. They're not even out there yet. They're fucking in a graveyard, right? So that's a little different in why we're trading it a little differently. Well, we'll keep buying it because it's got a lot to retrace, and we buy it with a short-term volatility mindset. But again, those other ones are not reopening. They are reinflation. You know what happens at casinos when there's inflation? A lot of fun stuff, that's for sure. Which says he bought tickets to Iceland on DAL this weekend. Took 2 hours to get through the phone lines. You bought a plane ticket on a phone? Holy shit. I was told by an inside source they are busier than ever. Hashtag inside info. Damn. Good thing we're in DAL then. Sounds good to me. They're busier than ever. True. Everyone's trying to travel right now. Iceland's beautiful, by the way. Iceland's awesome. It's actually from here in New York to Iceland is one of the quickest and cheapest tickets. It's very interesting. There's $110 ticket from here in New York City to Reykjavik. $110, and it's because of the angle at which it flies at. So it's only $110, and it takes very short amount of time. But Iceland's beautiful. You just gotta. I don't know if you guys or if you watch the Vikings TV show, but I always wanted just be on, like, you see that it's like, holy shit, this place is just different. Just being there outside and you just kind of walking around, it's like you're on a different planet. It literally feels like an alien planet. That's what it feels like. A black beach, in the way that the cliffs and stuff work. It's nothing like in the United States. We don't really have any cliff faces like that in the United States. At least, I mean, there is some on the upper, like on the East Coast. You get some of that like rocky shore sort of stuff in New England, but it like doesn't even look real. And it feels nice. You know what's one of the funniest things is that it's cold, but the wind is warm. That was one of the weirdest things that I felt, is that the wind is warm because you know, the way in which land it stays cooler longer than water. So like water will warm up faster than the land will warm up, and so you actually get the warm breeze off the fucking water. So it's cold out, but then you get this warm breeze, and you're like, that's pretty nice. Nice morning breeze. The dew is warm in the morning. You're like, okay, a little different. I think that's what creates the hot springs. And the beer is great, except the beer is more expensive in Reykjavik than it is here in New York City. It's insane. Like, what? What do you mean? Wait, it's gonna cost me. It's gonna cost me $13 for this pint. Like, yeah, okay, gotcha. Yeah, enjoy, buddy. Enjoy. Can't wait to do some traveling again. All right, 10 o'clock. Let's see what we get here. It looks like we're continuing to go bid. I'm gonna put the old 5 minute on. Oh yeah, look at it come through. We're definitely options heavy. Definitely options heavy right now, which is different than last week. A little different than last, or at least let me put into maybe not. What I mean is, for this move in here, this bid that came through, we were not very heavy on options, and same with back in here, we were already very low on options. We rallied through here in March, and that was it. And then we died down in April. Definitely a little bit higher in volume right now, which is good. A little speculation coming through. Um, you can see it. You can see it with the price moving a little bit faster. I can tell that it's a little bit more broader, right? Again, we were so heavy on value. A little bit more consistent across the board right now. Definitely. The sell side, mostly just take profit. So nothing really negative. It's mostly take profit from big days, which again is always nice to see because sometimes it's just not clear. Now TCS opened up and got pegged down, gapped right below the level. Now you're gonna need to wait until it comes back up, right? This sort of things happen. Again, it's just to take profit comparatively. Did 9% on Friday, which is mostly gonna happen. I would just wait for it to bounce back up before we get into that. We're not gonna try to catch it on its way. Otherwise, okay, here's a good example. Something like this is just going to happen, and there's nothing that anything could be done for, right? Oil and gas company gets gap down. It's down 7% right now. Oil and gas is up how much right now? More than anything else this year, right? It's not even close. It's just not even close. It's it's up over 50% on the year in less than 6 months, right? So this is going to happen. It's going to happen. Happens a lot less times than anything else, right? Now Ruby keeps going. Net is about to hit that trend line. I'm curious. Again, it's one of my favorite charts to shit on, and then also swing to the upside. So, uh, it's a very nice swing chart. I've used this as an example for a lot of things. It's very swingy. It produces patterns very heavily because it's traded by us, the people. A lot of behavior in there, so you can really see the people's mindsets, psychology, trading psychology, the way in which reacting to the market. So we're hitting the trend line right now. Put this on here. Let's see what we get here. Whether we get a big burst through candle here on net. If you do, then you're going to get up here to the 82 mark very quickly if it moves through quick, or you're going to get the very nice finessed breakthrough. Pull back into the trend line, carry on your way, right? That would be the best, but it's possible we're bullish enough to push right through. If it pushes right through, then that's some sort of gamma event happening with no regard to resistance, which is possible, but you're going to get a reaction. You can already see it stop moving, so nice move so far on net. Sort of waiting on some other tickers to get to their levels. We'll see all this too. I added HLT. Now, we've looked at this chart in the past as well. Again, it's just a part of the travel trade. This is like the first time I've ever looked at it in this way, but it's just because we had this most recent thing back in February, or a very sharp move. It's very low volume chart. It's a very low volume chart, and so if we're expecting higher volumes right now, it can easily do that. And so, 1.5% so far, definitely a good start. So we'll see how that goes. Again, you're never really, when you're betting on you're betting on something that needs to happen a very precise way. It's never really clear on how exactly it's going to look. So nice start so far. EQRs again. REITs continuing. Talked about last week. REITs really picking up the pace. It's everyone's. No one likes these trades, but they're so boring. But I mean, they've performed very well since the low, and I made money on them. So I mean, they can seem boring on the underlying, but when you're basically the only one in the option chain and you're boogeyman in the hell out of the calls that are being sold for hedges, right? That's the thing to remember. If you have a bunch of calls being sold, it's because they're hedges. And you're getting to buy them for nothing. You're buying them for a bullish reason. Someone is hedging their long position, which is what? Means the price is going up, trending to the upside. And you're the one now buying their hedge. They don't care if they don't get money on the hedge. It's just to protect their downside, right? And so you get to have all the upside of that because we're smaller. Again, we can move quick. You get all that upside without the risk of it, right? And so REITs are a great example because there's a lot of reasons why you need to hedge your REITs positions because of the way in which they tick. They're very slow moving, always connected, pre-market, after hours sort of action. It's all very slow, trendy. And again, REITs have a little bit of different functions in the way in which they have fees and pay. And there's a lot of hedging involved, but the hedges are over significantly long periods of time. And so the volatility is spread out over that entirety, right? So it's a very long timeline of volatility. We only trade in a very short timeline comparatively, right? And as we transition them, we take none of that long-term risk on. That's the REIT's problem, is the long-term risk. You remove all the long-term risk by trading 3-month options and getting out in like a month, right? And transitioning. So even though REITs are super slow moving, they present a equation that has zero downside. It's just trying to find out when the hell can you get your upside, right? Well, good thing we have a tool, as in technicals, that show us when a level's being broken to find out when a move's going to happen very quickly, right? We can find a trend line break and, oh, here we go. That's it, right? And that's how you can time REITs. These have been the easiest charts. They don't pay very much. You have to have capital to do it, but the more capital, the easier it is to get paid on them. But I mean, these have been the most straightforward charts I think we've looked at. They just haven't really put many points on. I think it is still important to mention because, again, people waste their money fucking gambling all the time when there are things out there that can present you a consistent return, which is what everyone should want to do anyway, right? Otherwise, what's the point? Why we've upgraded to being boomer status, buying dividends, because I'm fucking tired. I'm working half as hard as I did last year, because why would I work as hard as I did last year? Doesn't even make sense. Not right now. Put the money in there, grab them. What do I care? Am I gonna work my ass off to get a consistent return? Put my money in the market and gain it. Now, when you have less capital, you have to work your ass off. That's the whole fucking point. You gotta work your way there. Once you're here, whatever. You wake up late. You throw your money in dividend stocks. Every now and then, you're like, all right, I'll take some risk. Be active, focused in the option chain. You can buy some value. It lined up great. Buy value, throw it in the dividend. Buy T at the low. Get out over here. See, this is where you know you had about 3 hours to get out of this position over here. This is when you know the boomers are they've been buying AT&T because they're not getting out of their position in time. So we can get in and out real quick on our dividend charts because we've got plenty of practice. Boomers are in it for the long haul. Okay. DXI up 1%. I would call it a success so far, guys. Good job. Success so far. Up 2% on nail. Good job, guys. If you look, now I know it's hard to see because these candles are pretty big. There you go. Almost 2% so far. Boom. Lumber opened up 4% higher. So, good job, guys. You did it. You solved the equation. The guys literally solved the equation by just, you went bing, boom, boom. That's it. Done. We'll see what happens here. That's a down tick, so might be time to get out. Might be time. China's regulating the price of lumber. Go for China. We do continue. We're almost 1.5% up on NASDAQ. Very nice day so far. S&P heading towards 1. The old Dow over a half. Those are basically the same numbers. The Dow's up 0.5%. The S&P's up 1%. Those are basically the same. Pretty close. Pretty close ratio. Reads. This is one of the more ridiculous looking REITs charts, but makes it a little bit funner. VR. I mean, it holds the same pace on everything. I mean, I don't even know why I draw lines on the chart. It's gonna follow the same pace always, unless it gets a gap like this. All right, throw her over here. So we're about 1% from the all-time high. So all of you that get a little scared at the lows, don't worry. You're only 1% from the high. Gonna be all right. We're here. Guess we're really just waiting for mega caps to continue to put points on now. I would say that they probably have the most, just like Apple. 1.25 right now. I think you're gonna get some 2% days on as you approach that high. Then you'll slow down. That does probably 2% on Apple today, which is nice. Definitely nice. Uh the gain from Thursday, Friday definitely helped with everything that we got here today because it's definitely picked up the amount of bids coming in. Because again, if you build up that baseline, it puts us at a completely different spot. You're completely protected on the downside. It does make a lot of those calls a lot more inspiring to buy. They have intrinsic value. They're actually worth something. And they're not in the middle of nowhere looking like shit, right? Gonna get a bit of a ascending continuation triangle on some of these banks. It looks mostly the old Bank of America. Um, we just see how much this is. Sure. Sure. Which one's higher? What is that? 95, 94? Interesting. Hey, can you undo that? Bum. Bada bing, bada boom, boom, boom. If it goes here. Now we're gonna do this game. Nice. Um, and then this is the trend through here. I just those other trend lines are just the macro trend line. This would be for this pattern specifically. Look at something like this through here. No, you'd look through this. A little bit sharper through here. Here. What's that put us at? Continuation up to here is what? 10 bars. Oofa. Almost 9%. That would be, well, definitely there. Definitely there. Interesting. I didn't really think about a rally coming through banks at this angle, but That's just what we're on. Again, if this angle right here, if this trend right here continues, that's we would put 9% on in 10 days, 10 trading days on something like Bank of America here, which again, we're already in the position, but um, maybe you can put a little bit more risk on. Again, we're looking at a lot of, again, this should not be too much of a surprise looking at this chart because I posted a lot of flags and pennants from over the weekend, a lot of financial companies, right? So a lot of them have the same look here. Most of them, though, are a flag or pennant, which is their top trend line is pointing to the downside because it consolidated downwards. Major banks consolidated upwards and sideways because, again, they're the major benefactors of higher inflation interest rates, right? And so, but if you look at this trend, yeah, we're on a pretty significant. If you look at the macro trend, it's the usual angle across the market, but recently we have been doing this angle, and so that would be almost 9% in 10 days. So pretty nice look. It's not the same across the board, but you know, if we go back to the GS chart I posted, I did a very similar idea. We got it all in 1 week. This high to low was 10%. High to low on GS was 10%. We did very well on that trade. And it's important to note that on this day over here, when we started doing that, I noticed a very similar sort of idea to what I'm talking about right now, which was to put a short-term position on and take advantage. And so we get paid very well on pricing in a rally here. It doesn't always present itself, but I would go back and look at this move and how we looked at this move, and as soon as that pulled back, I went, this is, you can tell when a pullback is phony, right? That selling that happened on this day was very phony looking. And then we just jacked right up from there, right? And we talked a lot about buybacks and everything through that area. And that's where we put all this points on. But what was important here is that we put a very, it's not risky, but we put a very short-term position on compared to the usual long-term position we put on. A 1 month contract compared to 3 month here is 100% trade compared to 25%. I mean, even if you had a 3 month, you're probably getting quite a bit, but you know what I mean. It's probably 10 times, 3 times the difference or something, whatever it is in there. Looking at across the board again, we're looking at a breakout across the board happening. It does call for possibly a little bit more risk because it's pretty clear what's going to happen, and if we see it happening, then again, believe your eyes. I don't know. You see prices going up; they're actually going up. Like you're not going to be fooled. Like you do see it. It is happening. It's going to take something to stop it. It's going to take something to stop the momentum. I mean, unless again you're talking about Nikola Motors, which pushed a semi truck down a hill to act like it was driving. I mean, even that needed something to stop it, even though it didn't have an engine. But which, by the way, I mean, let's just be honest. Hello, we're possibly ready to turn on this candle. A lot of value in a company like this, right? Look at this chart. Looks like the spot VIX. Wait, is that the VIX chart? If I loaded this chart up, you guys would tell me this is the VIX. If I didn't tell you what the name of this, how do I turn this damn thing off? There we go. If I loaded this chart up and took the earnings bubbles off, you'd be like, "Oh, that's the spot VIX. That's the VIX right there." You'd be like, "That's definitely the VIX right there." Can't tell the difference. Those look the same. You know what's funny though is we've seen the more meme kind of stocks be very similar to the VIX. If I load up GME, the moves in here are almost identical to the charts. Now, obviously, there was a lot of similarities happening across the market that happened in this January. I mean, January was nuts. We put a lot of points on during January. But these charts are very similar. Very similar. All right, we just hit 1% on the S&P. We're done, folks. Good job. Cash it all out. Take the money home. Take the money home. And that's it. What if I told you the market was bullish and you go long, keep buying? What if I told you could have bought on a pullback last week and the week before that? What if I told you could buy on a pullback a year ago? Oof. What if you held? What if you cashed in on the juicy dividends and the underlying at the same time? Imagine making gains because the underlying is going up and because they pay you a dividend. Oof. And now they're going to increase it because the stock's going up. What if I told you could buy options and be leveraged by 100x plus the probably 250x that your broker gives you? That's 350 times leverage. That's $1,000 times 350. You only put $1,000 in. Times it by 350. That's your leverage with options. Go buy a $2 option, right? Just go buy it 100 times. Or in this case, 50. Oofa. Looks good, guys. Looks good. I think we hit it on the head this time. Did it pretty good. I don't know why I say this time. Every time. We keep it going. We keep it going. Be on the right side at the right time. That's all that matters. All right, we have any other news, anything coming out today? Again, we got to be a little bit sensitive to the politics side right now. I think I mean, it's anyone's guess. Biden's moderate as hell, willing to literally compromise on everything. So we went from the 2.2 infrastructure, now we're looking at the 1.7, and who knows where some of these things add up. And I think the one thing to remember to note is that the whole tax thing it should not affect equity prices at all. And so any bitching we see, again, that corporate tax and then wealth tax on wealthy individuals are two different things, right? They're the institutions and everything that are basically creating the appreciation in the market by continuing to buy more. They're not going to buy more, or they're not going to buy less because of wealthy people's taxes going up. Like those are corporations, those institutions. Yes, since the wealthy participants may what are they going to do? They're going to take some profit or something. It's not even close to the actual overall money that's in the market, right? And wealthy people also would be stupid to be like, okay, so I'm going to get taxed more. So I'm going to put less money in the market so I get taxed less. But that also translates to making less money overall anyway. That would be like me saying, so my job is to trade, right? And to invest my money. That would be like me saying, well, because you're going to increase my taxes, I'm going to stop. I'm going to just stop making money because I don't want to help poor people. So I'm not going to make any more money because that's going to show them. It would make no sense for me to stop making money. No wealthy person's going to go, you know what? Fuck the stock market because they're going to tax me more. It's not going to happen. It's just not going to happen. Yes, there might be weird timing where someone takes a little bit of profit before something happens, but we've already proven that that never happens. Every single historical chart since the beginning of time has shown that it's almost the exact opposite. It's almost the opposite. So, yeah, it's really important because they're talking about it right now, and we're gonna get articles and shit about it that Again, somebody that's getting paid 40 grand a year is trying to talk about wealth and and having money. Uh, it's basically the same of having no money. You just don't have to worry about shit, right? All of you, I'm sure, feel the same way. The more money you have, it's not like you're making different decisions. You don't have to worry about as much. But you're not going to just start all of a sudden drastically changing the way you do things. It's the same thing. You don't start, you know, I don't know. It's very weird to me to think that anything would change. It's like the same with like corporate taxes. We've proved that it literally doesn't matter. It doesn't matter what you do with the corporate taxes. Uh, that's not why taxes are not the reason why we started making things in China. Things are just fucking cheaper in China. That's it. They can produce more. That's it. We don't want to pay people the money here, and it's not even that the paying the money part, it's that people here don't want to work those jobs. That's the fucking reality. And so that's why we have this dynamic to begin with. We have very wealthy people and middle class. Should be a good thing. Yeah, we got to be sensitive to politics for sure. Since everything kind of runs through them right now in terms of spending, at least. In terms of spending. Okay, nice start to the new list. Fucking Google, almost at 3%. I'm so... Yes. Telling you boys, you just... my... I haven't seen my portfolio look like this in a little while, to be honest with you. I haven't seen it look like this in a little while. We've been pretty slow. Been pretty slow. But these mega caps, oof. Doesn't it feel good to buy on the pullback? Oof. You know what it says right now? We're almost at 100% since the first pullback buy on some of those options. 7% on Google from that low. Almost 100%. Ooh, feels good. Facebook. Oof. Oops. 11th. 8%. Facebook. Oof. That one feel good. Why we do it? Why we do it? Everyone's selling their mega caps, right? Now, yes, overall the Nasdaq kept going down. But guess what? Mega caps bounce back and they bounce back the hardest and they're the biggest fucking companies in the world. And so 3% on Google is fucking 30% on one of those small companies, right? In terms of value, like the actual monetary amount. And so your options are just getting toasty in there. 3% on Google is just heaven. Especially when you bet on the speed of it. We weren't we made bets on rallies coming out of that. That was the whole point. You put 10% of your portfolio to something like that, you're getting oofed. Feel Y continues. Let me put this back on the weekly. You can see how. So here's the ELY chart, the weekly log chart. We're trading right on the trend line. Right on the trend line. So again, even your weekly log chart proving the trend line's there, right? Which again is the usual angle of every trend line. across the market. But there it is. Trading on the trend line. Since that point, it's 11.5, but we entered through here. We're almost at 13 or so. You line it up to that entry. Very nice move so far. Which again, hey, listen, that's pretty aggressive, but to be honest, that's usually what the targets are. It's just betting on faster than average, right? This trend line's the average velocity of every single market. This is just it's just betting on a faster move. That's all. And then trade on the average again. Right? Just transitioning supply. It's really not out of the woods. I think it's a very nice start. Usually when I see something like this start to very much follow a trend, you right off the bat, again, when we see a weekly chart follow right off the bat, usually, we're pretty locked in there, right? Now things can change and consolidate, in the short term. We saw that with things like Z, for instance, and shit like that, but um, most of the time you're pretty much you're set on that. And it's usually just because again, long positions are being put on over time. They just continue to build up. Great start to the week, guys. Great start. At least in terms of trading potential and everything else, right? Coming off the ideas at least of what we've had over the last couple weeks, everything looking good. Really, again, from the pullback idea that everything else has basically been the same, but buying on the pullbacks here, again, proving the point that you buy on this pullback here. There you go. From this high to from the low of last week to the high right now is 3.5% on the S&P, which again in options terms is an ass load. I mean, it's a lot. It's a lot. It is more if you still bought back over here. That's which again is like the weird the strange part about buying I guess on every single pullback is you'll notice that when you buy the next pullback it costs more. What? That's that's sort of that's sort of the way it works. And that's again a supply and demand sort of question. You're in on this pullback, you're in the very early stages of the supply that's being made here. Really, it's the demand side, which we would call liquidity in terms of supply. But if we just say, we'll just call it supply, you're in the very beginning of building supply here when you're buying on the first pullback. When it pulls back there again, the idea of building support, you're now entering an area that we've already started to build up supply. And so you went from maybe, again, if we just use options as an example, maybe there's like 1,000 open interest on some contract here, and then we get back all the way over here, and through all this time now maybe we're at like 10,000. So what's going to happen? It's going to cost more. It's going to cost more over here, and again, I'm talking about supply through the demand side of liquidity. So we'll just say more demand. So the price is going to be higher because there's more demand, right? But it's because again of those contracts that are already out there long. So these ones are definitely better price point. And again, a lot of that changes because of volatility changes. So you might have had high volatility through here, and the way it fluctuated causes price changes. And so maybe through here, volatility steadied, and so the prices were actually cheaper. Sometimes the prices can be cheaper even though the underlying's higher, and it will cause a lot of buying, which then when it pulls back will cause a lot of selling and cause the spread to come down. And as it enters that level again, right, you're going close. You're getting close to the charts lining up, but the price is still going to be different because the volatility changed. So again, the projection is changing, but always worthwhile to buy on all the dips. At least we've seen so far. Dollar looking cute down here, consolidating at a low. I would love for it to just hold and hang out for a little bit, not do too much movement. consolidate and then start its trend. I think again, everyone's assuming it goes down further. We have our next level in the 80s. So we're at 90. You have all the way down to the 80s, which doesn't really amount to much of anything, but whatever. Bitcoin pulled back from the high a little bit. Chart's getting harder and harder to look at. It's not really clear at all what all that is. Let me put it on the 3-day log. There you go. Very helpful. Yep. Not much to see there. I mean, now it makes sense through this area, but now it's just you can't really tell. Can't really tell what's happening in there. A ton of arbitrage, right? Which is a ton of arbitrage going on in here. It's at the same level as it was a week ago, right? The same price, but there's spreads. Spreads are different. The spread is now further to the downside, which again is more bearish, causes lower lows and higher lower highs, right? But you're still at the same price. But again, that's because there's less volume causing further spread to the downside. So again, it just gets weaker and weaker. We'll see what happens, but not good. Not good. It's going to be hard to put $1 trillion back into crypto. It's pretty easy to sell $1 trillion because $1 trillion wasn't really sold. It's really hard to buy $1 trillion because $1 trillion really would need to be bought. And there's not $1 trillion out there to put into crypto. So the idea that it would snap back, a lot of different things would have to happen, right? And that it would all be technical, and we'd be able to see it because again, it would be very technical because it would be spread related. The only way that bounces back is spreads get fucking wild, and you're jumping up in price. Like Coinbase is offering 40,000, and then all of a sudden you have to buy at 45, right? That's the only way that kind of thing starts to get going, which can happen. But right now, what's happening is, again, there's a ton of arbitrage, which provides a lot of liquidity. And that's why that price is at the same price it was a week ago. Just sitting at the same price, even though the spread, because everyone's fucking trading it from exchange to exchange. Little shitters. What they do. The phony market makers for instance, are not allowed to take advantage. They just again, they make money from splitting the spread by offering a bid and an ask. They don't get to do anything else. And it has to be an even amount of liquidity. Those arbitragers are out there fucking swinging crypto back and forth, trying to make any dime they can scalping that. By the way, this is what a beautiful trend there to start the day. In terms of intraday trends, wow. Quite the look. Quite the look. Really makes you think when every single open looks the same. Coming off the lows. You wonder. Look at the lumber. Lumber selling further. Think we got it. Nailed too. See how you do it off the first tick? Fucking confusing, right? Very nice look. Very nice look. Do it right off from where it opens. Again, let me show you on the daily. We opened up here, right? All that matters for your equity. Boom. 1%er hasn't moved. The ETF, 2.25 hasn't moved. Why is it not moving compared to the futures? Because it's past the first hour. That's it. Literally it. Only the first hour, boys. Only the first hour. Otherwise, you're going to get very confused very quickly. But why? Why is it like that? Get some weird tightening going on gold over here. What are you doing here? All right, we're gonna be careful getting ready for this. So if you are in uh, the leverage ETFs on gold, get prepared for transition here. About as tight as you're gonna get there. Again, when you look at this, yeah, you're about as tight as you're gonna get. You're either going upside or downside. All you gotta look at is which way is it going. Very easy to see, especially if we look at the normal gold chart. Throw some lines in here. Very easy to see. Boom. Throw this through here. Even just using the wick of today. Throw that in there. There you go. You don't have much room. You've got 32 basis points that way and none. That's it for tomorrow. So I would just be looking at it like that. Now again, the low is a little bit buffered. Maybe you can throw this we'll throw it like this. Let's get a little bit wider, but I wouldn't wait this long. If price came down through here, I wouldn't wait that long. So I wouldn't wait a percent. I'd be already out. Again, it's about the movement. It's close though. It's very close to breaking, and it could just continue to trend. This is very slow, and I expect a break or breakdown. So it should be very quick movement that comes through. I don't know if it specifically should be today, but generally the start of the week. Generally, the start of the week is when those orders come through, and I've talked about this since things have slowed down. That we're looking at it on a more weekly approach. Orders are being put in on a weekly approach, which means Monday is when most of the orders come through. Big orders, especially on the commodities market. You're gonna go put in the big order on Monday, and then by the end of the week, you're judging whether you need to get out of the position for the next week or not. And then Monday comes again, you're making the same decision. Commodities desk are definitely working like that right now. Almost every single one of these candles, you can spot the the Monday candle. Larger candles are almost always Mondays. So this sort of thing in here, very slow start, very tight. So equilibrium is set. There's no other market that should really affect this right now. Dollar's barely moving. Bitcoin, again, is a question of whether some of that money goes to gold. I don't really expect retail to put their money in gold. Doesn't even fucking make sense. So they're going to go to equities. Maybe institutions that had their money here will put it back into gold, but I think they already have. And yeah. Lunch is probably going to look a little hairy today. Lunch is probably going to be a little hairy. All right, we're coming up to our... Look at that doji. Look at that bad boy. That's a 1 basis point doji right there. Oof. That's called the end of this trend intraday. That's called the trend is going to now reverse. Now we go down. Swing up, swing down, swing up, swing down. But lunch. I mean, lunch is probably going to be pretty damn flat. I think tech will sell a little bit because it's pretty up there. Except if we start to pull this back right now going into lunch, then lunch will be, yeah, it'll be basically flat, just swinging back and forth here on weird intraday low and highs. Not from the low of today so far. It's not going to go back down there. Definitely not. Maybe on the Qs, maybe it comes down to 330, 332, or I guess it could come down to 331 and a half, but I don't even know if it's going to swing down that far. I think it's going to be pretty flat through here. Probably one of those weird downtrend sort of days. like this. One of these ones. One of these little bad boys. Something like that. Otherwise, you get it done now. Get it done now and start to, again, you do your back and forth. Boom, 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 boom. But flat, for sure. Again, reason being is that almost all of this is on the backs of mega caps, and mega caps are not going to do much. These orders are already here. No one is selling the order that they just put through here. It just doesn't happen. So almost all the value is behind mega caps. They're not going to move much at all. So you're basically locked in. You're basically locked in at this price right now. 332.5. That call it done. Basically, the market's closed right now, I would say. I would say we're done. To be honest with you, I would say we're completely done. This is the price right here. Those of you that like to make your predictions for the end of the day, there you go. That's literally the price right there. So, quote me. Or we're going higher. In which case, it doesn't matter because we're already long. But Dawn, I read on Wall Street Bets that banks, institutions and hedge funds, they're so over leveraged in GameStop. They have so much in GameStop. They own more shares than are even out there. That if we hold and squeeze them, short squeeze them, we're going to cause a revolution. The end of banks as we know them. And the whole market's going to come down with it because of one game stonk. There's no one even short anymore. Everyone owns the goddamn stock. Or they sold it. But it could cause the fall of everything. $32 trillion vanished all at once because of one game stonk. That's worth 13 billion. But 32 trillion was erased that day. 1 trillion was erased from crypto and no one even cared. Everyone's lives were the same. But if 12 trillion, if 12 billion was erased, or I guess went up in this weird case, I think GameStop might just take all the money from every other stock in the world. And it's all going to go into GameStop. It's going to be the new currency. GameStop. Everyone is just going to all of a sudden start buying GameStop instead of anything else. I'm selling everything and buying GameStop, and the whole world is going to do it. And we're going to turn this $13 billion company into the equity market. I wish we could just look at one chart and it just illustrated every single stock in one. I think that's what GameStop should be. Oh shit, we already have that. That's what an index is. Shit. Well, either way, this is the I read a funny thread last night. GameStop and AMC are going to be the battlegrounds. They're going to be the battlegrounds between the banks, the institutions, and retail. This is where we have to hold. They're trying to take our livelihoods. You don't understand. They're so weak right now. They're so weak, and they just want to keep acting like it doesn't matter, but it does because they're so over leveraged. This institution with $3 trillion in assets under management, they're so over leveraged into GameStop right now. It's insane. Or like the short Bitcoin ones. Institutions right now are short Bitcoin. They don't want you to know this. Read this. Like, dude, what the fuck am I reading? Where do you guys even come up with this stuff? There's one. It's always good. We're gonna read some Trading View idea threads, and then we'll take a break for lunch. But I was reading this one from last night. He's like, I've done 80 hours of research looking at what institutions own, and they're definitely over leveraged in GameStop. And what? And you like 80 hours of reading Wall Street bets and Reddit is giving you research into what banks do? Like banks don't even they don't even care. Not even what banks do. What are you talking about? All right, let's see. What do we got for ideas? Take a look. The herd feels safest at the wrong time. Okay, let's take a look. Oh my god, this is so bright. What are we looking at? Bitcoin Weekly. What do we got here? These fib lines. We have some Elliott waves with some sub Elliott waves. Okay. And some okay, these are just levels he drew. Okay. Many right now are wondering what the fuck happened. This was beginning of the this was the beginning of the big run. Michael Saylor, Elon Musk, Novogratz, Square, even Jim Cramer touting cryptos as bull, 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 and many jumped into the bullshit. Even though I threw in Jim Cramer's name, he actually sold some Bitcoin and bought a house with it. So, so really, he did what many failed to do. He took his profits and bought a tangible asset, real estate. So he owns some Bitcoin and a free house. This is why Jim is a success and many others are failures. He understands when there's too much FOMO. Take some risk off the table. Wait, is this Jim Cramer? Wait a second. We found Jim Cramer's fucking Trading View portfolio. Oh my god, did he write this about himself? Alright, this is stupid. But I like the entry. What the fuck is that, Wiz? In S&P inverse? Down 98%? That's the wrong way, dude. When was that bought? 99? Holy moly. Bought in 2009. Oh my god. Could you imagine going short the market in 2009 and holding it until 2021? A fucking 13-year bull run going short? That's a true bear right there. That's a true bear. True bear. Damn. That's insane to me. I mean, some people look at perma bears. That's what perma bears. Well, he's dead now. Yeah. Well, that's sad, but you know. I mean, at least that he was a perma bear, and I mean, at least he was a perma bear until the end. You know, stuck with it. I mean, now at least his kid is now gonna learn. You know, well, I learned from my father. He learned from his father not to be short the stock market. All right, what is this? Wyckoff. Basic application of jerk-off method to present day crypto. What is this? Wyckoff? Jerk-off? I don't know what that is. What? This is too much text, dude. What is all this shit? There's too much stuff to read. What should I read first? Is there an order? Like, do I read this one first? I don't know which one to read first. Update the Wyckoff method. You just put text bubbles on there? I mean, I really don't. I don't know. I can't tell. You just can't do it. What else we got? Oh, he's part 2. Maybe I missed the first part. Watch this major support level on Ethereum to see if it holds. You really gonna tell me that? Oh god, this is an RSI on steroids. That's literally the technical name. Steroid RSI. You know what's funny though is that people are still making a shit ton of money mining Ethereum right now. The fees are fucking insane. Good for them. Okay, he's pretty bearish on it. Okay, I agree. Wait, what is? Where are we only in cryptos right now? People only want to talk about cryptos. Oh no, not a TLT chart. Michael Burry has 170 million in TLT puts. Why would that be so crazy? Everyone's selling bonds. Okay. Michael Burry from The Big Short seems to have placed quite the inflation bet. Oh boy. I think you guys you're in the right place, but the entire market put an inflation bet on. Bars Stallone is retiring. All right, nothing, boys. Nothing. Nothing good today. Nothing good today. But I'll tell you what is good. Making money. Only one day, remember. It's only one day. One day doesn't matter. What matters is again the movement, the trend. We're on a trend right now to the upside, continuing. If we compare even back, even if we go to the beginning of the May, right? We're still on this trend line. There was some noise. We knew we had some short-term volatility. There was a lot of things going on in here. A lot of volatility in the crypto space and the commodities space overall. We had some more data come out, right? We had jobs numbers that were crazy. We had all kinds of economic numbers that were crazy, right? Fed talked about it, continues to say the same. So again, there was a little bit of noise in here, but we're on the trend, continuing. Intraday should not matter, right? So I would say anything that happens in here shouldn't really matter too much. But again, this candle that we were looking at, the doji, is about to end. So it remained a doji, completely flat, completely flat. Shouldn't see too much else today. Everything looks very good though. Very good for the upside. Definitely happy with our entries for the lows. If you're still looking to buy, there's nothing wrong with buying anything around here, I would say. You don't need to be perfect. You're not going to perfectly time your entries, that's for sure. Especially if you're buying towards highs. You're probably going to lose some right off the bat, but that's sort of the price you're paying for the momentum towards the upside and why we try to buy at the low as much as possible and try to bang our head down there as much because it pays off. It obviously pays off better than having to buy up a few percent higher. Either way, I'm going to take a break for lunch. I will see you guys this afternoon. Nice start to the week. So enjoy.